may be that I'm being too cute with myself. I tend to do that from time to time. I remember during the COVID scare when oil demand fell off the cliff and Exxon got kicked out of the Dow 30. So all the index sellers, and I was thinking Exxon could get a little cheaper. What a stupid thing to think. Highest quality oil company in the world, a one-time event, getting kicked out of the Dow 30. Around an evaporation in the bid for oil, and I was too dumb to buy stock. Sometimes stuff is cheap enough, and uranium is probably cheap enough. I just have this feeling that it gets cheaper.
Hey guys, welcome back to Capital Cosm. Today we've got fan favorite, the one and only legendary Rick Roll. Rick, thanks for coming back on.
Danny, it's a pleasure being back with you. Thank you for having me.
Yeah, first and foremost, Rick, how have you been? How was the Rick Roll symposium?
Well, I think it was a tremendous success, but of course it has my name on it. As you know, with all of our educational products, our boot camps and our symposium, they have a gold-plated money-back guarantee. If you don't think you got your money's worth, just ask me. I'll give you your money back. We had no refund requests for the live attendees and 2 refund requests out of about 1,000 for the online attendees. So the ultimate judge of a successful conference is whether or not your customers enjoyed it. And I would say we passed that test with absolutely flying colors.
Fantastic. Well, hey guys, we're going to do a little bit of a mixed bag today. So we're going to rank some companies, but then we're also going to talk about a lot of news that's been coming down the pike as well. So we'll just kick things off, Rick, with gold and silver. Let's just start off with gold, actually, for now. Gold hit an all-time high of 2,500 a day at the time of this recording. What is your overall sentiment? What is your overall analysis on gold at this present moment in time?
Well, my first is that people focus on that probably incorrectly. I don't think that gold is up. I think the dollar is down. And when people ask me when gold is going to move, I say 2000. It was at $256 an ounce then. It's almost 2,500 now. Gold has appreciated, or rather the dollar has depreciated by about 8.5% compounded for 24 years. Gold is doing what it's supposed to do for 2.5 decades.
Yep.
And I think that's what people need to focus at. The second thing that people need to focus on is the fact that gold is not at real all-time highs. Gold is at nominal all-time highs. The denominator is the U.S. dollar, and the U.S. dollar buys you less of many things, including gold in real terms, than it did. My suspicion is that if you inflation-adjusted gold, that a real breakout in gold would probably occur at $2,800 or $2,900, and I think people need to understand that. How would you say? I'm personally very satisfied with the progress of my gold holdings. 8.5% compounded with no work for 24 years sounds like a very good deal indeed to me. People who have a different viewpoint, well, they're entitled to their viewpoint, but I would suggest to them that they really re-examine their premise as to why they hold gold and what they expect from it.
Yeah, isn't it worthwhile to kind of attribute this move to some volatility from the geopolitical front? Lately, there's been some volatility in the Middle East the last couple of days. Could that also play a role in some of the movement that we've been seeing in gold?
I'm not very good about mass psychology and popular culture and what it is that convinces people to do things. In my lifetime, the most profound moves in gold, I think, have coincided with periods when investors were concerned about the maintenance of their purchasing power in U.S. dollar terms. I think world events give people an excuse to do what they wanted to do otherwise. If there were people who were considering a gold investment, then I think trauma in the Middle East might be the triggering event to cause them to do it in the near term. But my suspicion going back 50 years is really that the underlying ethos around gold has to do with protection of purchasing power against real deterioration of purchasing power in fiat currency denominated instruments.
Right. So we've got a couple of gold companies that we'd like for you to kind of look at. The last video that I did, the ranking video, got a lot of positive acclaim, and there's a few other companies people wanted kind of get your take on. But before we do that, obviously there's a disclaimer to this, and that is that these rankings are a snapshot in time. So if you watch this video maybe a month from now, a couple of months from now, the same insights may not apply. So just an FYI, guys. And any additional disclaimers that you want to outline, Rick?
These are risk adjusted. So these aren't necessarily the highest quality companies. These are the companies where I think the juxtaposition of risk to reward is highest. I'm a risk tolerant investor, so people who aren't need to consider that. But I very much concur with your sense that this is a snapshot in time. Rankings change as the price changes. A stock that performs very well will perversely get a worse ranking because the juxtaposition of price to value deteriorates. Rankings can change overnight with no prior notice based on news. So it's important that people pay attention to the rationale behind the ranking as opposed merely to the numerical number assigned to the company in question.
Yeah, and that's what I'd like to highlight. I think the biggest value out of doing this kind of exercise is just to kind of pick your mind and see your thought process in terms of how you rank these companies and why you rank them the way you do. And there's nuggets of wisdom that come with it as well. What is the scale that you work with, Rick, for those who may have not seen the previous episode?
1 to 10, 1 being best, 10 being worst.
Excellent. Well, let's just go ahead and kick it off with New Gold, ticker symbol NGD.
New Gold, I have upgraded to 5. It was a 6. Stronger gold price helps it. Product development pipeline helps it. The balance sheet has also improved markedly with the generation of cash that they've enjoyed. I'm still not completely comfortable with their sustaining capital investments, which I think are low, but I have upgraded it from a 6 to a 5.
Excellent. Well, what about Oceana Gold, OGC?
Oceana Gold is in for reappraisal today. I haven't looked at it now for about 3 months, so I'd rather hold off on that ranking.
Okay. Novo Gold.
Novo Gold, I have as a consequence of the price appreciation now as a 6. The stock has performed reasonably well. And I think the improvement in the share price over the last 12 months has been faster than the improvement in the company's own fortunes.
All right. Well, Shandong Gold Mining.
Do not cover it.
Avino Silver.
I don't cover Avino. If I did, I would likely have it at a 6. I have a prejudice against small mines. Avino is a brand name for silver. And if silver runs, Avino will run too, because it's attracted silver bugs for 40 years. But I am attracted to mines that I'm attracted to mines that have in situ recoverable reserves and resources worth in excess of $2.5 billion in situ. And Avino is too small to interest me.
Gotcha. DRD Gold.
I have Durban now. I still call it Durban. I follow this stock for 40 years. I have DRD at a 5, up from a 6. I had the ability to interview the CEO of Durban in London not too long ago and was really impressed with their ongoing success in the tailings reprocessing business. I'm impressed too with the marginality offered by those tails in the uranium business. There's a lot of uranium in there. Uranium that doesn't make them any money at all at 80, but could make them a lot of money at 100, and you get that uranium for free.
All right. Red 5.
Don't follow Red 5 well enough to comment.
America's Gold and Silver Corp.
I have it as a 6. Again, I don't see any real attraction there, although they've done a good job of cult building around America's Gold and Silver.
Okay. I think that should do it on the gold front of things. Let's go ahead and pivot over to silver. What's kind of like your overview of the silver market right now, Rick? While gold is making a new all-time high, silver is kind of, slagging behind. It's a little bit below the $30 range at this very moment in time. And while gold's making an all-time high again, silver is about 50% off its all-time high. So what's going on there with silver?
Not much has changed since the last time we talked. My observation is that silver is a late cycle mover. The precious metals narrative has to be established by gold. The early motivation is the fear buyer in gold. When that narrative is established, particularly among generalist investors, leadership changes from gold to silver. When silver takes over leadership, it moves further and faster. When will that occur? I don't know. What I do know is that in 4 prior cycles in my life, when silver began to move, the upside volatility to the small group of companies that are legitimate silver stocks is breathtaking. And I'm willing to wait for 6 months or 24 months or 36 months or whatever it takes. I remember very well in the mini silver cycle that we enjoyed in the early part of the decade of the 90s, the price of silver standard going from 74 cents, I think it was, maybe it was 78, doesn't matter, to $45. I remember Pan American silver going from 50 cents to $45. Those are truly breathtaking moves. There are a lot of people who seem to have trouble investing in a long-term thesis with anything other than a short-term outlook, and those people will always be unhappy. I have enough of a memory of prior silver hypermarkets that I don't have any trouble holding my silver portfolio over a long weekend. When I'm going to get rewarded, I don't know. But I do know that when that reward occurs, it'll be worth the wait.
Do you agree with the statement that silver behaves like a commodity or an industrial metal until, like you said, the precious metals thesis or story comes into play into the public psyche? So right now, silver is still acting as if it's a commodity. It's still acting as if it's an industrial metal, and it won't act as a precious metal until we're in a legitimate gold bull run with, not just with central banks buying gold, but retail
I
coming into the floor.
absolutely believe that.
Okay.
I absolutely believe that. If silver were really truly to replace as industrial metal, then silver company cash flows would be valued at 6 times cash flow or 7 times cash flow. It would be valued the same way copper companies are or tin companies are. That's not the way they're valued. They're valued at 15 times cash flows. So from an investment perspective, silver is very much an industrial material. Pardon me, a precious metal. It is useful for the precious metal speculator to understand that unlike gold, silver gets used. And the supply in a year where there isn't a lot of adjunct or byproduct production actually goes down because of industrial utilization. But what you say is true. The real characterization of it in markets is as a precious metal.
Gotcha. Well, let's just go ahead and kick it off with Fresnillo. What are your thoughts on Fresnillo?
I own Fresnillo, but I have it as a 5. I would have it as a 4, except for the fact that the political landscape in Mexico is changing, and for the worst for silver producers. The incoming president of Fresnillo campaigns against the rich caciques, in particular the family that controls Fresnillo. So own Fresnillo if you can tolerate political risk.
Bear Creek Mining.
I have Bear Creek at a 6. I don't think it works at the silver price. And I think their dilution of the upside associated with their marginal silver projects to buy a marginal producing project was not good business. I note, however, that there is a cult around Bear Creek Silver, and Bear Creek Silver has superb optionality built into it. Deposits that are worth nothing at $30 an ounce could be extraordinarily valuable at $50 an ounce. So people who look at Bear Creek as an equity call option on silver around volatility, there is validity to that thesis. I don't happen to be one of them, but there is validity to that thesis.
And Great Panther Mining.
Don't own.
Highcroft.
Highcroft, I also don't own. I'm a secured creditor to Highcroft. Again, you're talking about an optionality play. You're talking about a deposit that probably ultimately has 1 billion ounces of silver. But the grade is so low that I don't know what number it will take to release it.
And Orla Mining.
The fact that Orla is sold off so aggressively makes it more attractive to me. I have it as a 5 now. It got well ahead of itself as a consequence of the cult of personality around the backers.
Silvercorp?
Silvercorp's going to get cheaper. They have done some acquisitions where they're issuing script, and that script will be sold because the people who own the stocks were looking, in fact, to be acquired, and that has occurred. Silvercorp is very, very, very difficult to rank because the Chinese operations are very opaque. Except for as sort of marks on a balance sheet or an income statement. The company has gone from strength to strength. I have Silvercorp as a 5, although I think it will trade lower over the next 3 months. I'm a real fan of the CEO, Roy Fang, who I originally underwrote in Silvercorp at 35 cents. Obviously, with today's share price, you can see why I'm a fan.
All right. Well, what about Investigator Resources?
I don't know enough to comment.
Merdeka Copper Gold.
Uh, Merdeka, I've been a
Merdeka.
shareholder for a long time. I'm surprised that it came up on your screen. It's only Indonesian listed. It's very, very difficult to trade. These guys are superb implementers, superb operators, and they seem to be able to operate as Westerners in Indonesia, which is no simple task.
And what about Polymetal?
Polymetal, I can't comment on when it becomes available for me to trade again, or when I don't have a bank and organization in front of the U.S. government. I'll talk more about Russian stocks again.
All right. Well, I think that should do it on the silver front of things. We're trying to keep it a little light here. We've got to mix.
Sure.
We're trying to mix it up a little bit here with this interview, Rick. I remember in the last call that we had, if you guys haven't seen that interview, where Rick ranks over 40 plus stocks, be sure to check it out. I'll have the link down below. But you mentioned that lithium at that time, but a couple of months ago, was your most asymmetric trade. You viewed it as the most asymmetric trade out there. Do you still hold that sentiment?
Well, I didn't say that. What I said was that it had fallen so deeply in favor, or out of favor, that I was starting to look at it again. I continue to believe that we will be in an oversupply situation for lithium for a couple of years. I am developing a lithium shopping list because there's a flaw in my personality. If I'm not early and I miss the first move, I'm too cheap to buy in. I believe the real bottom will be put in 2 years from now, but I suspect I'll be beginning to buy in 9 months. Lithium was never in short supply as a resource. There was a bottleneck in productive capacity, a bottleneck in turning the resource into the lithium-related chemicals where demand grew fast. That bottleneck has now been addressed. Meanwhile, because the lithium price rose, or the price of lithium products rose, everybody went to look for lithium, and we found a lot. And the market's going to have to sort out those deposits that worked at peak lithium prices and those deposits that'll work at normal lithium prices. While the market is sorting that out, I think the distress in lithium probably will result, in the emergence in lithium of a term market like exists in the uranium market. And I think that'll be the real changing point for lithium developers. I think that the hate in lithium will coincide with structural changes in the lithium market that will make it a superb investment theme. But I suspect that occurs in 2026.
Gotcha. Well, first and foremost, I apologize. I didn't mean to put words in your mouth, Rick. But I do want to cover lithium because we got a lot of feedback from people wanting to hear your opinions on a few lithium companies. Let's go ahead and start off with Albemarle, ALB, ticker symbol.
I own it. I have it as a 5. I think that investor sentiment goes against Albemarle for a very long time. It has disappointed an awful lot of people who believed in the lithium thesis without understanding the lithium reality. I think I'm way too early. I think it'll trend lower. I think on the metric price to value, it's already undervalued.
What about Lithium America Corp?
I don't own it. I think it's one of the best of the second tier, but I don't think it's as cheap as Albemarle.
Enersys?
I don't know enough to comment.
Ganfeng Lithium.
I have a very difficult time following it again because the financials and the operating statements are very opaque, being Chinese.
Mineral Resources.
Don't know enough to comment.
Pilbara Minerals.
Don't know it.
Arcadium.
Don't know it.
I'm gonna need your help on this one, Rick. Sociedad. Well, it's ticker symbol SQM.
SQM.
Yeah.
The second best lithium company in the world. I no longer own it because of the interference in their business by the Chilean state, but it's likely to be the next one that I buy.
Gotcha. Well, that's what we got so far on the lithium trade, guys. Again, we may be a little early on this trade, but just we did get a lot of feedback that you guys wanted to hear Rick's thoughts on lithium on a more
I
deep
think
level.
I think some of these lithium juniors that used to have $300 million market caps are going to have 30 or $40 million market caps when
I
it's
see.
over. And I think beginning in 2026, there's going to be a lot of 10 baggers and 20 baggers in lithium space. You'll be able to buy good assets for nickels on the dollar. Uh, you will need to do the work.
Yep, as always, right? So I remember I think you recommend what 2 hours a month per name or something like
1 hour per month per name in your
1 hour per
portfolio.
month.
And that doesn't mean listening to podcasts. That means reading the balance sheet, reading the financial statement, reading the management information circular, reading the proxy, reading the 43-101, actually doing the work.
Right. So what we've been covering so far, Rick, are obviously public companies, right? Anyone can just buy these companies. Another world in and of itself is private placement. And I kind of want you to walk us through what are some best practices, like if someone's never done private placement before, what are some very high level things that they should be aware of? What are some best practices? And also talk us through what you've got going on in a few weeks now on the tail end of August.
Yeah, I mean, a lot of the careful investing I do is financed by very aggressive speculating that I did when I was younger. And private placements are usually a speculative technique. There are private placement opportunities that are investment grade, but they're rare. So one needs to define oneself first as a speculator, and one needs to have the discipline that's common to a speculator. An equity private placement, a well-constructed equity private placement, involves the introduction of capital to a project where that capital has a potentially catalytic result. And so the first thing that I look at when I'm investing in a private placement is, will this money result in more of the same? In other words, is it simply working capital to pay for salaries? Or will it answer an unanswered question in a way that has a potentially catalytic impact on the company's value and hence the share price? The second thing that I insist on in an equity private placement is a good deal. Remember that when you subscribe for a private placement, at least in Canada and the United States, you receive restricted stock. While all the people who get the benefit of the capital that you introduce to the company have free trading stock. They can sell out of a mistake or they can take advantage of success more easily than you can. The consequence of that is that you need an inducement to get you to convey this favor to them. The inducement, from my viewpoint, is usually a warrant. The ability to benefit, again, from the success that was occasioned as a consequence of the introduction of your capital to the equation. It's very important that people understand the sources and uses around private placement, what the money's going to be used for, and what the probability of a successful outcome is. We propose to teach people how to do this. I also like private placements where, if the deal is good enough to attract my money, the existing players are interested in the private placement. One of the things I've always liked about the Lundin companies is anytime the Lundins have presented me with a private placement opportunity, the family and the family trusts have taken down between 25 and 30% of the offering. If the deal is such a good deal for me, and if they know the company so well, they better play. If this opportunity doesn't frankly fire their greed, it's not going to fire my greed. We're going to talk a lot about pre-public private placements, around the fact that IPO is often an acronym for it's probably overpriced.
Mm.
People often sell pre-IPO private placements as manna from heaven, when in fact they're often invitations to catastrophe. And we'll talk too a lot about debt private placements. The truth is that the worst piece of debt is better than the best piece of equity on any individual balance sheet. And too many speculators pay more attention to equity private placements and not enough attention to debt private placements. I've been doing debt private placements now for 40 years. They have treated me extraordinarily well. There is both an art and a science to both debt and equity private placements. Now, if you attend the boot camp, I think we're going to charge you $99 for it. This is not an entertainment product. We're going to give you hours and hours and hours of dense programming. Do not do this to yourself if you aren't really interested in the intricacies of private placements. You will have access to the recordings of this boot camp for a long time, and you'll need to utilize them. We're going to give you more information in 8 hours than you're going to be able to absorb in 8 hours. Finally, of course, like every educational product that we've offered for the last 28 years, this comes with a gold-plated money-back guarantee. If for any reason at all, including your own lack of preparedness, you don't feel like you got your money's worth from attending the boot camp, email me. I'll give you your money back. No questions asked. I would prefer, if you don't like my product, that you tell me why so I can make the product better. But there's no need of that. So the risk, the financial risk, is all mine. But please don't show up if you're entertainment oriented. Please only show up if you're genuinely interested and genuinely willing to work hard.
Yeah, I mean, this is essentially like I mean, it is a classroom, as you put it, Rick, and you're the professor. So, like, if you guys really want to become better investors, you really want to, delve deep into the space that is private placement, then I highly suggest you check out the Rick Roll Bootcamp. Link is down below for the private placement bootcamp. Rick, let's go ahead and let's come back to the world of the public stock market. The Nasdaq has been selling off quite a bit. Many analysts have been pointing out that this could be the start of a rotation trade from away from these speculative tech names and growth and into value. What do you think about what's going on there and the broader stock market?
I value the question, but I don't view myself as an expert in mass psychology or market psychology. I never played the big tech game because I never knew how to value the stocks, which is to say, I believe that money is made on the delta between price and value. And given that I didn't know how to value those names, I never knew how to compare price to value. I find myself always drawn to sectors of the broad market that people hate. As an example, for the last 18 months, outside of resources, I've been buying community bank stocks because people hate them. The idea that I can buy a well-run bond portfolio underwritten by real managers, not by Wall Street, for 5 times free cash flow seems appealing to me. So I'm probably the wrong guy to talk to about momentum leadership in broad markets, simply because I only do natural resources and conventional services. I don't try to participate in markets I don't understand.
Well, a market that you may understand and a whole lot of us may not understand is the uranium market. And that's been, for lack of a better term, acting fairly schizophrenic lately. We did have a pretty dense, broad sell-off across the space today. I think URNM was down 7% the last time I checked. That could change, obviously, by the time you watch this recording, guys, FYI. But we are seeing some interesting changes in the uranium space. Although nothing's really, fundamentally, nothing's really changed. But what's kind of like your take on the uranium space at the moment? Have we lost a lot of that asymmetry that comes with the uranium trade? Where do you see this going?
I love hate, Danny. And this market's getting better and better. I monitor the comments on places like X, and the fact that the great unwashed is beginning to dislike the uranium trade makes me happier and happier. For me, as I say, money is made on the delta between price and value. The uranium trade got overpriced, and I was a seller of uranium stocks a year ago. And the X universe, the Twitter universe, thought I'd lost my mind, having been a proponent of uranium before. I believe and I think we need to segregate. There's probably 85 publicly listed issuers in the uranium space worldwide. I don't know the exact number. There's probably 12 that are worth buying.
Hmm.
Most investors don't know the difference between the 85 pretenders and the 12 that are real. The consequence of that is that the 12 that are real are being thrown out with the 85 that are fake, which I think is absolutely positively wonderful. If you look at the fundamentals around uranium, the Japanese are restarting their uranium fleet. So the biggest seller has been turned into an immediate buyer. At the same time, new plant construction is happening worldwide. At the same time, the big thinkers of the world, who 5 years ago thought that uranium was the worst element in the periodic table, are now subsidizing it. The co-founder of Greenpeace is attracted to it. Meanwhile, the structure of the uranium market is better than the structure of any other commodity market in the world. Term contracts between producers and investment quality purchasers can be had for periods of time as long as 20 years, providing certainty as to both the price and the volume that you sell the commodity forward into. Try to do that in gold. Try to do it in oil. Try to do it in copper. There will be 5 years from now more transparency in the uranium market for a longer period of time than has ever existed in any commodity market ever. This will give confidence to lenders like me because we'll know the price that our borrower is selling the product for, and hence can more easily estimate margins and their ability to repay our loans. This will assist lazy equity analysts like myself to better understand the nature of free cash flow going forward because of price certainty. All of these wonderful things are happening in the uranium trade. It's lost its momentum. And the people who were attracted to the narrative rather than the reality are selling. This is the happiest possible circumstance for me. I hope it continues and accelerates. I would like to greatly increase the size of my uranium portfolio because of the certainty of the outcome over the 5-year time frame or the 10-year time frame. My hope is that my entry point is as much as 35% cheaper on some names. It might not be, but I'm allowed to fantasize.
Yeah, I mean, would it be fair to say that you're a buyer at these levels, or not quite yet?
Not quite yet. I should be. I mean, some of the better quality names, I absolutely positively should be, and it may be that I'm being too cute with myself. I tend to do that from time to time. I remember during the COVID scare when oil demand fell off the cliff and Exxon got kicked out of the Dow 30.
Mm.
So all the index sellers, and I was thinking Exxon could get a little cheaper. What a stupid thing to think. Highest quality oil company in the world, a one-time event getting kicked out of the Dow 30 around an evaporation in the bid for oil. And I was too dumb to buy stock. Sometimes stuff is cheap enough, and uranium is probably cheap enough. I just have this feeling that it gets cheaper. When
See.
I looked at the sell-off around the Cameco quarterly, I didn't think the sell-off was overdone. I thought the quarter was lousy. And I look at the quarterly, I look at the sell-off around Kazatomprom, and I don't think that was overdone. I think that quarter was lousy. And I think probably what you're seeing is sentiment around those two quarters causing the whole sector to sell off. Whatever it is, I welcome it. I don't think that the selling has become cataclysmic yet, but I hope it becomes cataclysmic.
Yeah. So, Rick, I'm going to pivot over to another section of the interview. What I've been doing the last month or so is I've been asking my guest to ask a question to my next guest. So, if there's a question you'd like to ask my next guest, what would it be?
Who is your next guest? That'll determine the question.
Are you familiar with North Star bat charts?
I'm not.
So they're technical analysts. They cover commodities and natural resource stocks from a technical analytics point of view.
I'm embarrassed to say, Danny, I know little enough about investment psychology, mass psychology, and technical analysis that I would be unqualified to ask your next guest anything of value. I try to confine my questions to subjects where I think I can add value. And I don't think I'm being excessively humble by saying that my knowledge of technical analysis and market psychology is so rudimentary that I wouldn't have an intelligent question to ask.
Hmm. Well, I mean, you could ask you could ask a fundamental question.
If I were to ask a fundamental question, I suspect that I would ask a fundamental question about what they thought would be the rate of deterioration of the purchasing power of the US dollar in the 12 to 24-month time frame. I'm not looking for a recitation of the CPI, by the way,
Right.
which I don't think is an accurate representation of the deterioration of purchasing power. But for me, the most important question in investment finance, not just because I'm American, but rather because the United States accounts for 23% of the savings and investment assets in the world, is what is the relationship between the deterioration of the purchasing power in the US dollar and the interest rate charged on the US 10-year Treasury? I think every other question in front of us pales into insignificance compared to that one.
All right. I'll ask them and I'll let you know what they say. Well, I
Great.
have a question. I have a question for you from Fabi Lara, who was my previous guest. And she wants to know.
Okay, cool. I want to know what their most promising asset, doesn't have to be stock, but asset is on their portfolio going into the next few years. So like what is their one precious thing right now?
Oh, I don't have one. I guess I would have to say for most investors, not for Rick Rule. For most investors, they would have to be very high quality names. And if I had to probably pick one juxtaposition of risk to reward, it would probably be ExxonMobil. For people who are underweight gold, which is most investors in the planet, the highest quality is Franco-Nevada. I know that your questioner is probably looking for a penny dreadful that could go from 25 cents to $5. I don't have one of those that stands out. If you would have asked me for a penny dreadful a year ago, I would have said Origin Royalty. That one's performed. You could see the writing on the wall with those two royalties. But I'm embarrassed to say I don't have one right now. There isn't a small stock where the juxtaposition of risk to reward is so great that I have the courage to name one. So I have to name higher quality names.
Fair enough. That is an answer in and of itself. Another question that I've been asking my guests is to recommend a book or two that would make the audience a better investor moving forward.
I love that question. 4 books in this order. Economics in One Lesson by Hazlitt. Easy to read, valuable. You learn the way the world is, not the way the big thinkers want you to believe it is. Buy it for young people and make them read it. Read it yourself, too. The second one is The Intelligent Investor by Ben Graham. The best investment book ever written relative to the effort required to read it, which is low. Especially the Mr. Market chapter and the chapter around margin of safety. Once you've read that and understand it, then read Securities Analysis, also by Ben Graham. Simply the best investment book ever written, but not easy to read. If you read Securities Analysis and you employ the lessons, you will become rich over time. Not you may become rich, you will become rich over time. Understand it's very, very, very difficult to employ the processes, the rational processes, and make yourself overcome emotion and fear of missing out. The final book, which is the most impactful book I have ever read, is Human Action by Ludwig von Mises. It talks about motivation. It talks about inspiration. It is really the book that talks about how humans act individually and then in groups. And once you have read Human Action, you will understand why Economics in One Lesson, The Intelligent Investor, and the Securities Analysis all work. As you read Human Action, you will hate me. It is a very dense book, written in turgid German, translated into more turgid English. But to me, it was the most impactful book I ever read.
Do you do audiobooks at all, Rick? Or
I love audiobooks.
Yeah. That's what I recommend as well.
Love audiobooks,
Especially
particularly
I actually
where
have these books up here, but they can be a little intimidating. So I mean, I recommend audiobooks, if
I
people may not have
particularly
enough
read
time.
them. I particularly like them when they're read by the author. You
Mm.
know, listening to Angela's Ashes by the author in that lilting Irish accent, as opposed to reading it, was an entirely different experience. I mean, they were both good, but one was spectacular and one was merely good. So when I have the opportunity to listen to an audiobook that's read by the author with the author's cadence and diction, that's a special treat.
Yeah, totally. Well, hey, Rick, it's been a pleasure having you on. Where can people find you? And if there's anything else you want to mention that we haven't talked about, feel free to do so as well.
Uh, a lot of my good work is free. Go to Rule Investment Media, uh, list your natural resource portfolio for no obligation. I'll rank it 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues where I think my comments might have value. I don't know if you can see my shirt,
Yep,
but
Battle Bank.
if you're unhappy with your current bank, and you want to look at a new bank, one that wants to battle for your business, at Rule Investment Media, simply write in bank in the question and comment section. For those of you who are accredited investors and serious about private placements, check out the private placement bootcamp. Understand this is not an entertainment product. This is an educational product, but we look forward to having thousands of you there, like we have for our silver bootcamp, our uranium bootcamp, our prospect generator bootcamp, our royalty and streaming bootcamp. All of the bootcamps have been well attended. They've all offered great value, but they've all made the attendees work very, very hard.
Yeah, we'll have the link to that boot camp down below, guys, if you're interested. Be sure to check it out. And yeah, if you guys enjoyed it, type "Go Rick Go" in the comment section. Go Rick Go. Like the video, subscribe to the channel if you haven't already, and I will catch you in the next episode. Bye, y'all.